Adam, look, this has just kind of been a continuing story of job cuts and seeing them more in Asia. What do we know about this latest round of job cuts and the details?
Well, yeah, at the moment, Danny, what we know is that Goldman and Citi are both going to be embarking this week on kind of like a new round of reductions here in their headcount. What we know is that essentially at Goldman, there is going to be around 15 deal makers that will be affected, about 9 from equity capital markets. And then at Citigroup, it's around 20 jobs that are mainly at more junior levels. And of course, a lot of this is to do with the fact that revenue from stock sales and also mergers is under real pressure in the second quarter. And that's kind of the key reason here that they're needing to make the reductions. But of course, Wall Street banks as a whole have been continuing to face this pretty tough environment for some time now. Deal making has been under pressure across the world. We've seen M&A particularly drop of late, not just in this region, but in the rest of the world as well. And so it's a continuing picture here of these banks trying to readjust, trying to stay nimble, and trying to just put resources where they need to at this point in the cycle when there are clear kind of opportunities still available, but they need to just reduce in some of these areas. And that's what we're seeing really here at Goldman and Citi.
But there are short-term costs, and we heard some of that from Citi's CFO yesterday, who was talking about the potential for expenses to rise because of severance packages. What's the dynamic there?
Yeah, so really what Mark Mason was talking about, the CFO at Citigroup at a conference on Wednesday, was about the expenses associated with having to make people redundant. Of course, it's not a zero-sum game, and it can be quite costly. And he was saying that it could lead to expenses climbing by as much as $400 million this quarter compared to the first 3 months of the year. So clearly a material number there. And most of that at Citi is tied to the severance packages that will be related to the departure of about 1,600 jobs. So clearly there's a need to kind of for these banks to they're wanting to get ahead. They're wanting to say and be open and transparent with shareholders, but also with their staff that these are the numbers around what we're trying to do here. We're trying to position for what's going on ahead. But clearly it's a sign of continued worry about a deterioration in not just the economy, but in the areas of investment banking that have been particularly hit that we talked about earlier, M&A and equity capital markets particularly under pressure at the moment.